We think that demand for PGMs will continue to grow in line just about with world GDP. But we expect that current challenging market conditions and stressed balance sheets will result in constrained primary supply from South Africa. Longer term, we are optimistic about a more positive dollar pricing environment for our metals.
Martin Creamer from Mining Weekly Online. If you could just elaborate a bit more on the demand. You talk about this primary supply declining, and yet it doesn't seem to be having any impact, or no, not a major impact on the price. At least it is staying around 1,000. But can you just elaborate on your reference to vaults and on-surface material that seems to be impacting on the price, and how long this might linger for? Does anyone know, or can you give us your insight?
We don't know what the quantum of liquid stocks are in the world. There's some good guesses, let's say 2 million ounces or somewhere around that number. But it's a very difficult number to pin down. I think many people have done research on it, and there's some good numbers out there that you could refer to. But at the end of the day, when the tightening in this market is realized, that potential liquid stock will all of a sudden become very tightly held in our view. So we don't necessarily hold the view that that's as significant an influence as perhaps what has been communicated from some quarters. We're not overly worried, for instance, about those so-called liquid stocks around the world. We think they're pretty much what they've always been, to be honest. The environment that we're seeing in the metal prices is not necessarily directly linked to the fundamental supply and demand balance. There's other things at play across the world that are influencing metal prices, and the oil price, and so on, currencies, and so on and so forth. What we are saying is, in our view, fundamentally, this market is out of balance over the next 10 years by some way. We are not mining anywhere near the forecast demand numbers. And that's why I quantified in a very simplistic way, extrapolate platinum demand, which we believe is going to happen, somewhere less than world GDP. The quantum is 9 million ounces of platinum required by the world, plus minus, by 2025. Where is it going to come from? Obviously, primary supply is the first item, of which 80% is coming out of our region. You've heard me say we think it's 4 million and declining. It's a long way from 9. The recycle market is the next element. Recycle is also very, very price sensitive, and recycle is in decline. It's not growing, it's in decline. It's very dependent on the stainless steel price and, of course, the PGM price. So we think the quantum of recycle, let's add 1.7 million ounces to the 4. Be generous, we're at 5.7. Then let's add the rest of the world. Give it another 1.5. I don't know, take a guess. You see, it's not 9. The nominal quantum of platinum demand for the world is 9 million ounces. 9 million ounces in turn is a very large number relative to primary production out of Southern Africa, which we believe is in strong decline and continues to be so. To take an example, for South Africa, we peaked our primary mining output in 2006 at around about 5.5 million ounces. This calendar year, we do not expect, as Northam, for South African primary output out of the ground to be higher than 4. We think it's lower than 4. In other words, tons times grade times recovery. I'm ignoring pipeline stock changes and vaulted metal sales. The raw mining production is in decline, and it's in decline in essence because there's been at least 10 years of almost, well, no significant investment, very relative to what we're mining. And at the end of the day, you can't mine the same ground forever. These ore bodies are very old now. A lot of the Western Limb shafts, they were conceived as 30-year life of mines. I mean, some of these shafts are 40 years old and above. It's a depleting asset from day one. And you can't mine the same ground forever if you don't invest the capital to replace that infrastructure. In other words, capitalize the ore body, then you're not going to produce.
Do you have an estimate on what you think South Africa's total platinum production could drop to? You say 4 million ounces this year. I mean, how low could it go?
We think the general trend line from that peak in 2006 to where we are now, so from 5.5 to, let's take this year at 4 and be generous, that trend line is continuing. It's a gradual natural depletion trend line. So it will continue. You can effectively extrapolate it. In many respects, in fact, it cannot even be better than that extrapolated trend line. The ore bodies are finite. So the other issue to point out is that we also making the assumption that all those ounces can be made profitable, mined profitably. There's a qualitative overlay on the ore bodies because we didn't mine the hardest stuff first. You know, if it was a progressive mining effort from surface downwards. So you know, in many of these shafts, it's really a remnant mining type activity. It's very scattered. It's not concentrated. So you know, it's more costly to do. There's also a qualitative overlay. You know, a lot of the Merensky is mined out, and the UG2 on the western limb in particular is a very rather poor quality, relatively speaking, to the Merensky that was. So these things, in our view, and in our analysis, imply a much lower production, primary production out of South Africa from the ground, not from vaults and pipelines, going forward, unless there's capitalization of new areas of ore body. And as you will know, a lot of those projects, or the near-term projects, are actually on hold at the moment. So they would have to be financed, restarted, and it takes time. And I think that time is probably the most precious thing that the industry needs to consider here. It's actually not the capital cost, it's the time to produce. And we take the view at Northam that we would like to be first to market. In other words, we don't believe that we must start the construction effort the day the market turns. We believe the market will turn because it's in fundamental demand-supply deficit. We'll prepare for that time and make sure we can produce ounces into that rising market.